until now.
More than just business news, we're news for business people. Good morning. Welcome to BloombergQuint. This is India's first live streaming business news service, and I'm Menaka, Doshi.
Good morning, I'm Niraj, Shah right here on Indian Open.
Good morning, I'm Dugal. Let's get straight to the headlines. Asian markets trade mixed on the last day of an otherwise strong quarter. The SGX Nifty hints at a flat to positive start for Indian markets. The Nifty index will get back to its original count of 50 stocks as 3 companies make it on the list, replacing 4 others. Government sticks to its planned borrowing target for the second half of the fiscal year, but asks PSUs to increase capex to boost growth. And HCC's lenders invoke strategic debt restructuring for its Lavasa township.
Well, let's look at the trade setup for the day. We'll start off on a flattish note. The Asian markets in the SGX Nifty is indicating that, so no surprise thereof. We'll have a flattish start to the trading day today, but that's not bad. Yesterday we had a flattish start and we ended up moving towards the highest point of the day. Let's see if we defend 9800 mark convincingly or no. Don't look at the bulk deal or don't look at the institutional data, really. Look at the bulk deal data, and that's what I want to say. The 5,000 crore numbers seem very, very large because a bunch of bulk deals that happened throughout the course of the trading day yesterday, and which is why these numbers are deceptive. So keep in mind that the multiple block deals had a reason for the FIs to sell so much or the DIs to really go out and buy so much. But the options data, as we kickstart this October series, suggests a band of 9,700 to 10,000. These may change, but for now, the trader's positioning is this wide or the narrow, depending on how you look at it, a 300-point band. And we'll probably see our markets now return to moving in line with the global trends after 3 or 4 days of divergence that we saw earlier this week. What to watch? I think the macro data coming out, the deficit data coming out could be interesting, but more importantly, over the weekend, from a stock-specific perspective, the gas price and the ATF price revisions that will happen over the weekend and will happen before we hit trade on Tuesday could well be very, very important points to monitor. Auto sales numbers will be very, very closely watched over the weekend as well. The commentary thus far has been pretty strong, and we'll speak to the management of Ashok Leyland a bit later on in the show as well. So watch out for the auto sales numbers that will come out over the weekend. From today's perspective, stocks to watch, the proposal for a unified pipeline tariff hike will keep GAIL in focus. Undoubtedly, this could well turn out to be the stock of the morning, so do watch out for GAIL. CNX IT will largely be in focus. Specific pockets within that should be in focus, but the space by and large will be in focus after Accenture's numbers. And EPC, it's a micro irrigation company. The commentary was very, very weak. It's a small pocket, but it's an actively traded pocket with the likes of Finolex and Jain Irrigation and a few others. So EPC's commentary could well keep some of these micro irrigation companies in focus today. So do watch out for these as well. However, what we should do is speak to some large global experts about how is it that they are approaching investing across the world, more specifically the Asian and the emerging markets and India. Bill Maldonado, Chief Investment Officer, Asia Pacific at HSBC Global Asset Management, joins us right now on the show. Bill, great having you. Thanks so much for taking the time out. And you're joining, of course, BloombergQuint in India. What is your thought? What are the conversations with clients currently? Because what we've seen over the last couple of months is that outflows happening in the emerging market pack. India is not alone. A bunch of Asian markets also in that basket. Is this a trend that is likely to continue? What are you advising clients to do?
Well, we're very positive on the Asia region. I think we're sitting at a real sweet spot today for the Asia region. We've got synchronized global growth for the first time in a long time. US, Europe, UK, China and Japan are all growing at or above trend rates. And that's very positive for Asia. Asia's still a region that's very geared to trade, to exports, and that's really helping the region. On top of that, Asia looks very undervalued or meaningfully undervalued relative to developed markets, relative to the US, and relative to bonds and credit. So a lot of positives here. The really big story for us is that earnings are also picking up now. This year is the first time that we've been seeing earnings upgrades and beats for the first time in a long time. And if you look at profitability, if you look at ROE, it's the first time in many years that we've got a meaningful pickup. That's going to make Asian equities even more attractive. So our advice to clients is to be invested in the region, to think about equities in the region as being very positive. And I would just comment on the flows that you've mentioned. I don't really think that anything material is happening. There's always inflows and outflows at the margin. I don't think we've seen any kind of positive or negative move on that front. Flows have been very weak into the region for a long time with, as I say, a bit of oscillation around that very, very weak overall trend. And what we'd hope is that those would pick up over the next 6 to 12 months. If we get that pickup in flows, that reinforce all the other things that I talked about and could make the market performance even more positive.
You would expect flows to pick up into EMs and Asia despite what's happening in the US as well. October could see the first shift away from what's been a 10-year policy of the Fed, and December we could possibly see a rate hike as well. You would believe despite these two events or this one large event, we could still continue to see increased flows into the Asian region and the emerging market region?
I would think so. I would hope so. I mean, the reduction, the trimming of the Fed balance sheet normalization and the potential for a rate hike are very well priced into the market at this point. There can't be anybody alive today who hasn't thought about it, who hasn't heard about it, discussed it. It's very well priced into markets. I don't really think that's the key driver. I think investors are looking out a bit beyond that, and they're thinking about how sustainable is the global growth that we're seeing. Is the US going to continue to accelerate? Is it going to stay more or less where it's at? Or are we actually going to see growth come down to trend rates of growth and perhaps below trend rates of growth? I think that's what's really important for investors today, and certainly what we're very focused on.
Bill, I know we're running short of time with you, but my last question, how closely do you look at India? And if you look at it really closely, does India stand out as a key market to invest in? And the verdict out there is split right down the middle. Which camp are you on and why?
Yeah, well, we have a large business in India. We have a team in India and a team offshore investing in India, both in equities and fixed income. So it's a very important market for us. And we've been there a long time. So we really like India. We think there's a lot of really good companies, many of which are these days global companies, which are headquartered in India, managed in India, but which really are not pure domestic companies. And of course, you have the pure domestic players as well. India, for us, holds a lot of potential in the future. If the government can continue with its reform agenda and we continue to see progress, I think there's so much upside for the Indian economy. Today, Indian equities look a little bit expensive on average because they've been performing very, very strongly over the last 12 months. We can still find stocks which are not overpriced in our view, which are still not expensive, but we have to look harder and harder. We're a very valuation-focused investor, so that's getting a bit tougher for us. But we love the underlying picture. We think it's extremely positive, and we really, really believe in the long-term progress that India can make.
Okay, Bill, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. That's Bill Maldonado of HSBC talking about them being very positive on India.
I know something maybe Yashwant Sinha will not want to hear this morning. That is tongue-in-cheek, I might add. All right, that's what the market looks like, both the short-term view for the day and the longer-term view, as you heard from Bill. Let's get you First Word. And today we've got more news than views on First Word. Starting first with the Nifty, it goes back to being 50 as the rebalancing kicks in today, and we'll be adding to banking and financial stocks in the index. Agriculture will be represented by UPL. The gas regulator's new consultation paper may mean huge windfall gains for GAIL. We'll tell you all about that. Accenture earnings beat estimates. How does that bode for Indian IT companies? And the government can't spend more or can't afford to, so it wants public sector companies to step up. But are they up to it? All of this and more on First Word, starting with the Nifty, which goes back to being 50.
Absolutely. 50 stocks back in the Nifty today, periodic reconfiguration, but Darshan Mehta standing by with details on what's making the cut. Darshan.
Okay, so first thing, it's good it's back to 50. It was very stupid to say Nifty 51, but yeah, that's the big takeaway. But yeah, let's take a look at which are the companies that are coming in. This was already announced earlier, but they became effective today. Bajaj Finance, HPCL and UPL. These are the three companies that come into the Nifty. What goes out are companies like ACC, Bank of Baroda, Tata Power and Tata Motors. DVR goes out of it. Now, what will be the weightages of Nifty here of these companies? Bajaj Finance will be close to 1%. HPCL close to 0.9% and UPL will be close to almost 0.8%. So these are the new weightages according to IDFC. These are the estimates that IDFC has given. Now, in terms of how does it place? So banks continue to and financials continue to hold a large chunk. So private banks have 23%, NBFCs have almost 10%, and it's historic low for PSU banks at 2.5%. The others pretty much remain. Oil and gas goes up because of HPCL coming in. The others remain pretty much unchanged at this point of time. Now, what does this mean in terms of some of the counters? This is the important one. The weight of banking and financial is equal to the weight of oil, technology and auto. Oil has Reliance, the largest market cap in India. Technology has TCS, the second largest market cap, but still it's banks that rule the roost as far as the Nifty is concerned. The other important factors we have to watch out for, agri for the first time gets a representation in the Nifty with UPL. Oil and gas weight increases to 4.9%, and for the first time in history, all the three oil marketing companies are part of the Nifty. This has never happened before. And financial weight remains same because Bank of Baroda goes out and Bajaj Finance comes in. FY19 earning estimate to see a 0.4% cut. This is because of the restructuring, and this is as per the Motilal Oswal report that came out. In terms of how the performance of these Nifty companies have been ever since they came out. So Vedanta, ever since it came out from the Nifty till the time it re-entered the Nifty, has moved up almost 210%. Grasim up 57%, PNB up 55%, ID up 3%. The only loser is BHEL, which was down almost 10%. Now, which are the companies that have, what has been the performance of the companies ever since they came back into the Nifty? Vedanta, ever since it came back, 33%, IOC 23%, Tata Motors DVR 21%, but the others have been lackluster. Indiabulls Housing Finance up 3%, Eicher has been down 12%, Aurobindo down 24%, and Bharti Infratel down almost 24%. So historically, if you see, actually it's not a bad thing to get out of the Nifty because the stock price clearly reflects that it's a good thing to get out of the Nifty. If you come in the Nifty, you have a negative return or pretty much flat return.
But that's unfair, right? Because only a few stocks had a negative return. Several of them have
just see the ones that moved. Just see if we can bring out the exclusion list. Ever since that will give you a clear picture, because look at Vedanta up 210%, Grasim up 57%, PNB up 55%. The only two ones. So I think the success ratio of you making more money is if you bet on a stock which goes out of the Nifty rather than an inclusion in the Nifty.
We should plot Vedanta against a commodity chart to tell you whether there is any correlation with it being in the Nifty or out.
Be it luck or whatever. This is what history says. I'm not making up. These are facts that I'm putting in front of you. So
all right.
Data can be seen anyway.
Data can be seen anyway.
Yeah, true. Okay. All right, so that's the Nifty rebalancing today. We've got another big story playing out this morning, rather overnight, and that is that the Petroleum and Natural Gas Regulatory Board, that's the PNGRB, has put out a consultation paper for a unified tariff proposal mechanism. Now, GAIL is the company or stock that's likely to be the key beneficiary from this move, and Somit is standing by with more on exactly how the unified tariff system works and how GAIL stands to benefit. Somit?
So the unified tariff is proposed to make the landed gas price cheaper for consumers who are away from the source of gas. So what will happen is consumer closer to the source of gas will be charged marginally higher to average out the price across network. Now PNGRB has proposed a tariff of 2 rupees per standard cubic meter, which will also ensure a return on capital employed of 12%. So who gains from this? GAIL India. GAIL India benefits the most as it has more than 10,000 kilometers of natural gas pipelines in India. And moreover, this new tariff is 60% higher compared to the tariff that GAIL India earned in financial year 2017. Now in financial year 2017, GAIL India earned close to 1.25 rupees per standard cubic meter as tariff. GSPL, that is Gujarat State Petronet, can also benefit from this as it operates 2 interconnected gas networks in Gujarat. So let's see what are the brokerages are saying. Now brokerages say that this new tariff could boost GAIL India's EPS in a big way. Now BOB expects the gas volume to be in the range of 108 to 117 MMSCMD over FY18 to FY20, and these new rates could boost GAIL's EPS by 48%, 43% and 41% over FY18 to FY20. Equirus Capital expects the transmission net profit of GAIL India to boost by 35% and 34% for FY18 and FY19 as the new rates come in. And Citi says that the new rates is a game changer for GAIL India, and if these new rates would have been applicable in FY17, it would have boosted GAIL India's EBITDA and net profit by 23% and 30%.
News expected? Is it already baked into the stock in some fashion, or is this going to mean a big up move today in the...
GAIL India had earlier put up a paper and they were asking for a rate of 2.9. But now it has been revised, and now they are saying that and now PNGRB also is positive on this thing and saying that we should make this unified tariff unified tariff to come in, and they have suggested this rate of 2. So this is 2.9 was
lower than what
priced
GAIL
in.
had recommended.
But the 2.9 was anyways not priced in because that was just a presentation that GAIL had made to PNGRB.
All right, great. Thanks very much for that, Sumit. And I think we've got some more in terms of corporate impact, and that this time it's earnings.
Yeah, this time it's earnings. If I can just make one quick point, I remember, Menaka and Ira, that when PNGRB revised the tariffs for IGL or gas distribution, even though it was known that this is going to happen 15 days or 20 days before, after the revision was done, the stocks did have an impact. Out here, because it is not even known exactly as to when it could be happening, because this news has come kind of out of the blue, you probably expect GAIL to react today for sure, maybe even react as and when the event does happen. So this could well be the stock of the morning.
Nice.
Yeah. So
all right, we've got more than GAIL though to talk about this morning. The IT sector may be in for a slightly better quarter given Accenture's earnings.
Yeah. So hey, I know both of you would have thoughts on this, but just a couple of things that I picked out after speaking to a few people as well this morning, and just thinking back through what we've done over the last 10 years in Indian IT. So results were ahead of expectation at the upper end of the guidance, and while there were cross-currency tailwinds which aided this, I thought it's important to put out what it means for Indian IT. Now, one should not equate that what Accenture has done would mean that the entire IT space would benefit out of it. That fundamentally is not the case. Players which offer niche related vertical services would probably be the ones that will benefit. And to my mind, companies like HCL Tech and TCS, it's not featured in the list of what the brokerages have said, but these two typically tend to show some correlation to the services that Accenture gives out, and those could be, they deliver in similar verticals in a similar vein, and therefore those two could be in focus. But I just want to read out what Goldman Sachs has to say, Menaka and Ira. One, they are saying that the positive read across from Accenture's results with strong growth in the EU region for HCL Tech would probably mean that HCL Tech could benefit or could already be benefiting and doing some good work out there, and maybe we'll see that verdict in the results. Similarly, the revival of the telecom vertical growth in the UK and the EU region could mean well for Tech Mahindra. So they could already be reaping the benefits. We'll probably hear from them.
We'll know that in 2 weeks from now,
yeah,
a week or two from now.
Yeah, but they mentioned that the healthcare vertical growth in the US was pretty weak, and maybe Wipro could be feeling those pangs. We've already heard from Wipro in the last quarter that they don't expect this quarter to be a big bang quarter.
Yeah.
Maybe some more questioning when the Wipro management speaks will be in order with regards to this particular thing. But the last interesting bit that they are saying is that the big Indian IT growth is unlikely to remain subdued. This is Goldman Sachs' view in the absence of acquisitions. But just that one point, don't broad brush the whole IT space today because of what Accenture has done. There are specific 2 or 3 companies that tend to deliver in certain pockets which Accenture does, and maybe those are the ones that should fundamentally be in focus, if at all, in the first place.
Yeah, namely HCL Tech, I think Tech Mahindra and maybe TCS, right? Wipro on the downside, if anything. Yeah. Ira?
All right, I think we are just making a slight segue into the macros. The finance minister spoke yesterday, or the finance ministry spoke yesterday. A couple of things. Firstly, just want to point out for those who were interested in what's happening in terms of second half borrowings. The government did say that they're intending to stick to their second half borrowing numbers. So 2.08 lakh crore is what they will borrow. But they did use the term as of now. So it is possible that come December, if things don't improve on the fiscal side, there could be increased borrowing. But the relatively more interesting part was the finance ministry talking about the need for increased capex from public sector units. The 3.75 lakh crore, which was planned for, is on track, they said. And they also said that there could be an additional 25,000 crore coming in terms of capex from these public sector companies. Going on to also say that some of these public sector companies are very low on debt, so perhaps they should go out there and borrow a little bit more. We just did a very quick sort of rough and dirty analysis of some of these public sector companies and their financials. And, I'll start with the caveat that this is not an all-inclusive list. This is just some of the large listed PSUs to see what their numbers have looked like. And actually, they didn't throw up any very clear trends, but, there are companies which do have large cash piles and can spend. And there are those who have seen their fundamentals deteriorate. So SAIL is the obvious one, and that's a chart which is showing the cash equivalents and short-term investments for these companies. As you can see, SAIL has seen a considerable downtick, but that's an industry-specific issue. Coal India too, over the last 3 financial years, and that's the data that we looked at, although you should probably look at it over a longer period of time. Coal India too has also seen a deterioration in their cash pile, but they still have 31,000 crore, a little bit more than that in terms of cash and cash equivalents. NTPC has seen a significant decline in its cash and cash equivalents, and just mentioning that specifically because there's always been talk of NTPC coming in as some sort of a white knight for stranded power projects. ONGC also has seen a decline over the last 2 years in particular, as has BHEL. Actually, BHEL has not seen a decline. Sorry, I stand corrected there. If you look at the debt to equity ratios and the EBITDA to interest expense ratios, just to understand what their debt profile looks at, again, you'll see that it's not that bad. So the finance ministry does have some merit in suggesting that some of these companies perhaps can borrow more and then spend if required. And then the EBITDA to interest expense numbers will also show you a trend where SAIL, of course, is an outlier because they've had a year of bad losses and barely managed to stabilize. Coal India has a huge amount of earnings relative to interest expense. NTPC does as well, as does ONGC and BHEL. So, the finance ministry is not entirely out of line in saying that these companies can spend. However, with the caveat that the finance ministry should not be telling these companies what to do.
Well, that caveat stands for almost everything in the public sector. But you got to ask the question, is it better to encourage these companies to spend? And I think, interestingly, if you see that finance ministry note, the last line gives it away, saying they encourage public sector companies to use different means and new means to raise money, including InvITs, etc., right? So not only are they saying, look, we want you to spend, they're also now getting involved in saying, hey, look, you can raise money in different ways if the traditional routes seem exhausted or not interesting.
100%. I mean, they can certainly do that.
Yeah, but the second more interesting thing is what's the toss-up, right? Either government extracts money through dividends, buybacks, and things like that, or it says you raise money and so it's extracted as much as it can.
Yeah.
Right? Because, I mean, you can only pay dividend from reserves.
Yeah.
So now the only way they can get these guys to help is to say, now you raise fresh money, obviously of which can't be used to pay dividend, and you spend it.
Absolutely. And, they can raise at very reasonable rates. They all have the backing of the sovereign.
The question, why does this not filter into fiscal deficit, I want to know? Why are PSU companies' borrowings not part of the government's deficit?
That's a good question. It should be a liability, but not a direct liability.
Especially if you are directing spending through them, and these guys are raising money through debt, etc. Then at some point, all of this is off balance sheet.
It's a contingent liability.
It's all off balance sheet.
It should be considered a contingent liability.
Yeah, because I mean, really, how silly would investors be if they know that you're sticking within your fiscal deficit line by not borrowing money, but you're directing your subsidiaries, so to speak, to go out there and borrow money and spend?
Yeah, no, that's a very valid point. I mean, the only counterpoint is that the numbers are okay, so they can support that borrowing. But yeah, I mean, it's the government's burden at the end of the day. If things go wrong, for instance, in the case of SAIL, if they're in a mess, the government has to put money. So eventually it is the government's liability, just like it is in public sector
And we know
banks.
how difficult recapitalization is, right, in this country. And also project viability at the end of the day, right? All of these things matter. It isn't just that you have the balance sheet to do this.
Absolutely. What are the projects that you can put on the ground?
So no, I long point short, yes, directed spending is a bad idea, right? But what are the options?
Yeah.
All right. So the last piece we have for you on First Word Now. We don't usually play tech reviews on this segment, but this one will interest all of you invested in media, content, cable, and distribution companies. BloombergQuint's Ayush Elavadi got his hands on the Jio cable. This is at the Indian Mobile Congress, and Ayush tested it to find out if it's a game changer. Will it change the way you consume news, you consume entertainment, you consume BloombergQuint? Watch this.
Well, it's an interesting technology. It's very simple, actually. It's essentially this USB, which is connected to this box. The box looks exactly like this. When it comes to this particular box, if you just take it out, it's going to become as one unit. So you'll have this box, this tiny little box, which essentially what you do is you put the USB from the Jio phone into this. On the other end, you have a TV out. In this scenario, this is an HDMI out, which I'll be showing it to you later. But it also comes for these old CRT TVs. Remember the ones you used to smack to actually start and the ones you wanted to change channels on? Well, this one is connected with an RCA cable, the yellow, white, and red one. And I'll show you what the content looks like. If you actually simply just pick up a Jio phone, unlock it, right? Keep the star button to unlock it. Press it, long press it, of course. It's unlocked. There's two ways. Either you speak to it. It's a noisy India Mobile Congress, but I'll show you something. What you can do is just hit Jio TV. It loads. And I'm going to, well, if I'm in the mood to watch a movie and I want to watch it on my Jio phone, running on their Jio network, on this VoLTE 4G network, I can simply click. I just clicked. And voila. Well, Z Cinema is playing out there automatically. Well, it's not just CRTs. We also have this. This happens to be an HD TV. And like I showed you, this particular cable has an HDMI out as well, which is what you have on your Tata Sky HD boxes or on your PlayStation 4s. That's what you use. So you've got to put that cable in. What they will give you is this cable, the USB, and of course it'll be charging, like I told you earlier. That cable aside, just to show you how quick this is, and this is something I wanted to test for myself, where here this phone's running only on Reliance's Jio network, and I click on it, and I want to watch sports. I love sports, right? You know I love football. I click on it, and the channel changes in an instant to HD futsal. I don't know if I like futsal, but I do like football, and I'm watching HD TV in a jiffy.
All right, I just like the simplicity of the product a lot. I thought it was, you know, for people like me who don't get involved in buying a set-top box and then configuring it and figuring it out, or the Apple TV box, or all of those crazy things. If all you need really is a cable to connect your phone to your TV, then I can, you know, watch BloombergQuint on my TV at home now, and that'll be really, really cool. So I thought it was interesting, and I think also it will put to peril the business models of distribution companies. So very interesting to watch.
Oops.
Yeah. No, of all cable and distribution companies, it'll mean a big boost for content.
Yeah.
You know, because if you're streaming on the phone, and it's a 1,500 rupee phone, as Ayush pointed out. So if you're streaming on the phone, you've got a good data plan, pretty much anybody can be on TV.
Yeah.
Or whatever device you want to be on. Nice. Interesting to
Changing
watch
times.
all this. Yeah.
Should be interesting. Sorry.
Before we get back to the markets, just a quick word on what's coming up through the show. At Open, we'll talk markets and macros with Mahesh Nandurkar of CLSA. At 9:30, Gopal Mahadevan of Ashok Leyland tells us what's moving things in business for them. And then we'll have a quick chat with IDBI Bank as they try and attempt to clean up their balance sheet. All of that coming up over the next hour and a half or so.
A full tilt towards the day today, and let's get it to Agam Vakil, who's standing by with a quick check on the derivative space. Agam, start of the new series, what is it showing?
Absolutely. So it was a very interesting expiry yesterday, considering we saw the Nifty snap its 7-day losing streak, and you know, the variables have changed substantially. Let me start off with what's happening in the Nifty itself. Of course, given the fact that we are moving into the new series, we are looking at a lot of addition in the October futures, about 72% addition there. When it comes to the Nifty Bank futures as well, well over 108% addition as far as open interest is concerned. But key variables this time, firstly, Nifty put call ratio, that has moved up to as much as 1.24 from below the mark of 1. This means that there is more amount of call writing as against puts. But how is it stacked up when it comes to your distribution? Well, when it comes to calls and puts, well, it's stuck here. But what we're looking at is a lot of writing in the 9,800 calls and puts. Similarly, of course, when it comes to a little more changes, we are looking at a range between 9,900 and 9,700. Finally, coming down to stocks, we are keeping an eye on the likes of TV18, which has seen a nearly 56% addition in open interest. Of course, the other counter we are looking at fresh longs in is also KPIT Technologies, up as much as 74%. On the losing end, however, fresh shorts building up in the likes of Siemens, where open interest has moved up by as much as 65%. So these are some of the counters that we are keeping an eye on as we move into trade, as well as the new series.
Okay, thanks a lot for that, Agam. Abhijit Pathak, Director at Definite Solutions, joins us right now on the show. Abhijit, good morning. Thanks for joining in. I hope viewers were listening into you yesterday, because your thoughts worked out as you had spoken. Now, my question to you is, what is the index likely to do over the next couple of days? Is there an option for somebody to initiate a trade today?
Yeah, actually, we are at a very interesting day today, because 1 minute.
Okay, I think Abhijit is just trying to get his charts going. Keep in mind, yesterday what had happened is Abhijit had mentioned that it might be a good idea to go initiate a fresh long on the 10 October series 10,000 call. And with the markets moving up a bit, I think that call would have worked out well. The question, quite frankly, to Abhijit today is, for somebody who didn't do anything yesterday in trade, fearing that it was expiry and don't want to get into it, what's the option before him or her today? Abhijit, what's that option?
Yeah, one can still go long in the 10,000 call. Only problem is today is an interesting day, because it's not just the weekly close, it is also the monthly close, it is also the quarterly close of this year, September quarter. That is one interesting thing. And the second interesting thing is there is a long weekend, because Monday the market is closed. So there are people who are jittery about the long weekends, especially, in fact, not even long, even the small weekends, normal weekends. And now we have one more day as a weekend. So whether people carry longs over the weekend, that is something. But as long as 9,700 holds, there is no problem. Only thing is 9,800, 9,820 will act as a resistance. If Nifty closes above that, that will be a very safe bet to carry longs over the weekend.
Okay. So in line with that, what is it that you believe people can do outside the index? Because I think your call is to hold on to the 10,000 October call that one went long yesterday. Beyond that, is there anything specific that you would recommend, Abhijit?
Yeah, the TCS futures for October still holds good, and that can give a good trade as long as 2440 holds on it. That can be also bought today, if as long as it does not. The problem on the first day of a new expiry is the fresh contracts for October generally open with a gap up. And the problem is when to enter, timing the entry becomes a problem. So it is a bit difficult to talk about the exact level, because they will open with a gap up compared to yesterday. But TCS is a good long.
Last question, Abhijit. Any other pocket that is looking interesting from the commodity space? Because yesterday cement stocks were up, rubber prices are cracking. That should keep the excitement around the tire stocks active. Anything that looks interesting there?
Yeah, ACC looks good to me. I mean, it has declined all the way from almost 1900 to 1600, and that can give a rally to at least back to 1800 in the month of October.
Fair call. Abhijit, thanks so much for joining in today and giving us that perspective. That's Abhijit Pathak with his thoughts around the derivative space. Hold on to the 10,000 call that was initiated yesterday. But that's not all. We mentioned about the commodity space and how active it is looking. Pradeep is here to tell us all that you need to know about commodities this morning. Morning, Pradeep.
Good morning. So, yesterday all eyes were on currency, and today we can say there is some respite so far as the dollar is concerned. It's kind of cooling off from the highs now. the traders are trying to look into the details of the tax amendments that Trump administration has proposed. So that's a good news for commodities, and we can see the impact. Gold has steadied a bit after falling yesterday, but if you look at it, this would probably be the first monthly loss, if it closes around the current levels, and this would also be probably the sharpest decline in this year so far. So September has been interesting for gold. It went all the way up to new highs, but then corrected. A deep correction, so it's going to close with a significant correction today. If you look at other commodities, Brent is kind of trying to hold on again. If you look at steel and aluminium, they are weak, but zinc and copper, these are two commodities which have been holding on. Especially zinc remains very, very strong, and a strong uptrend is still going on. Rubber has slipped again, and that's the one really to watch out for.
I wanted to ask you about that, rubber. I mean, I've heard you speak about rubber at least 4 days out of the last 8. What's happening here?
So going by, the market trend, there has been a steep correction, but there is still a kind of a debate going on, between analysts, and our research team also suggests that the impact may not be immediate on the equity as we really expect. And the reason we track rubber so closely is more from the equity perspective than the commodity perspective, really. And there could be a lag of 3-4 quarters before the tire companies are actually able to benefit from this decline. But decline has been significant, a decade low in rubber that has come on the back of strong plantation trends.
So that's interesting. We'll watch out for some of these commodity-based stocks as well. As we've said, we also watch out for a slew of other reactions. I thought GAIL would primarily be in focus, and we'll speak to Ajay Srivastava, who will join us in moments from now to talk about all of this. But hey, this weekend is pretty packed as well, because we'll have the gas price revision, we'll have the ETF price revision. So both of those. We'll also have the auto sales numbers coming in. And while I know a lot of people will look at the estimates given out, what we do every month at BloombergQuint is we speak to a slew of dealers, numbers ranging from 15 to 35, depending on how many people respond, and try and get a sense from them as to how would the monthly sales would have been. What's the dealer feedback really? Because that's the primary feedback, right? One is what the companies tell, so on and so forth. But the other is what are dealers saying? And if indeed dealers are positive on how the month has been, then that could give an indication of what the trend is likely going to be without getting into specific numbers. So I think those 2 or 3 things over the weekend could be very, very interesting.
Yeah, so the last 8-9 days of the month, actually, the Navratri period is when most of the sales would have come, because first 15 days were the Shraddha, when people normally don't buy cars or any vehicles. So it would be interesting how the festive season has actually been this time.
Yeah, so September may not be very different for some automakers. Now that we are saying so because, excuse me, we are saying so because of BloombergQuint survey that we do every month, as I said, has thrown up some very interesting data and results. And Yash Upadhyay is with us to talk about this very data. Now, Yash, how many dealers did you speak to, and what is this suggesting?
So good morning, Niraj. I spoke with around 30-35 dealers across India, and from what I can make of it, September does seem like a mixed month as far as auto sales are concerned. In the four-wheeler space, Maruti Suzuki sales are estimated to grow by about 10 to 12%, with a lot of these dealerships running a slew of promotional offers on their entry-level cars like the WagonR, Alto and Dzire. We're seeing cashbacks and exchange offers running up all the way up to 50,000 rupees depending upon the model and variant, while demand for its premium end cars like the Baleno, Dzire and Brezza continues to do very well. We are seeing a waiting period of almost 16 weeks for the Brezza and anywhere between 8 to 9 weeks for the Dzire 2017 model. Tata Motors is another company which is doing quite well. Dealers estimate sales to go up by as much as 5 to 8% on a year-on-year basis. Now, this is because its Tiago and Tigao models are doing quite well for itself. But the key factor over here is the company's launch of a new car, that is Tata Nexon, in the compact SUV space. Now, a lot of these dealerships are just getting their hands on the car, but the initial response from what I've understood is quite strong, and there is significant interest from customers. So that would be a key factor to watch out, because the car is priced quite aggressively at just the under 6 lakh mark for the base model. While the same could not be said for Mahindra & Mahindra, no new launches except for a refresh to its TUV line of car, and the government deciding to hike the cess on SUVs and large luxury cars. This has hurt demand. prices of some of its cars like the XUV and Bolero have gone up by as much as 80,000 rupees. But notwithstanding that, the XUV and Scorpio demand is quite good in the metro cities in the north and western regions, while Bolero is doing quite well in the tier 2 and rural areas. But that's that for the four-wheeler space. In the two-wheeler segment, Hero MotoCorp, which reported record sales in the month of August, may have a lukewarm September, with dealers estimating volumes to grow up by as much as 5%. Now, this is partly because of the Shraddh period that Pradeep sir was talking about earlier. And typically, this is a 10 to 15-day period, which is not considered auspicious for such buying. And generally, it takes place in the end of September, somewhere around the last week, and gets over in the first week of October. So that did have some sort of impact. However, dealers are telling me that there has been a sharp pickup in demand ever since then in the last week or 10 days. So TVS Motors is another company which is estimated to see its sales go up by as much as 10%, driven by robust demand for its Jupiter line of scooters. The company announced a classic variant of the model, and its sales have crossed the 2 million mark, virtually cementing the second spot in the scooter segment ahead of Hero's Maestro. Bajaj Auto may not have a good September this time around, with dealers saying that volumes could be down by as much as 10%, no new models, and only some amount of price correction there. But lastly, saving the best for the last, we have Royal Enfield. Dealers are quite bullish, and volumes may go up by as much as 15% on a year-on-year basis. The company announced 2 new color variants of its best-selling models, that is the Bullet 300 and 500 models, along with the BS4 model of the Himalayan bike, which is quite popular amongst the millennials.
Did you end up buying anything, Ajash?
I would definitely want to.
You would want to. Okay, fair call. At some point of time, Yash, I'm sure you will do that too. But thanks a lot for joining in. Let's welcome in Ajay Srivastava, Managing Director at Dimensions Consulting, with his thoughts on the markets, festivities, and more. Ajay, as always, really appreciate you taking the time out and joining us on BloombergQuint. Thanks for doing so. Before we talk about the markets, since we're on the topic of auto and auto sales, just wondering, the commentaries thus far from a bunch of two-wheeler companies, specific commercial vehicle companies, has been positive. What are your thoughts here?
No, I think it should be positive because this is the peak period in which the sales happen for the country. And although the festive sales go on till October, the supplies to the dealers, which gets reflected in the dispatches from the companies, should be at a peak at this point of time. And this is a break or make quarter in a matter of speaking for these companies, because if the sales don't happen in this quarter, then you can't really cover it up. So I think they should be positive. There are lots of new launches. There has a lot of been the cess increase buying, so that will come into place at this point of time. So I think a bunch of factors, including the festive demand, including the pre-GST cess increase buying, all should add up to a very good quarter. Now, how it impacts the cess impacts the demand going forward, we have to see. But I think this quarter you are safeguarded, because not only for the festive reason, but for the cess coming in, a lot of people book the cars, pick the deliveries up, etc. So you found accelerated sales from the dealers and supplies coming in. So this should be a very, very good quarter in my view for the automotive sector. And this whole Damocles sword of the cess coming through has really helped them push the market, to the product to the market.
So what's your strategy on auto stocks? Looking at the data, actually, there's an old saying that economy moves on wheels. But if you look at it, the auto sector has been holding strong, while a slew of other sectors that really give you an indication of how the overall economy is doing are not performing. So do you think standalone auto can hold on and also sustain the valuations that we have today?
See, let's not generalize a company performance to a sector performance. If you look at the auto sector by and large, let's take the car segment. Lots of the car guys have fallen off the cliff, whether it's GM, whether it is Ford, whether it is Volkswagen, they have fallen off the cliff. So in a scenario, what we have is really a duopoly of Hyundai and Maruti, which are gaining market share. And since Hyundai is not listed, you have only one stock left, Maruti, to buy into an auto stock at this point of time. So the sector has not done well. The company is doing well, and it will do well because there is no competition left. There are 60+% market share and no sign of anybody coming into that market share. Now, look at the two-wheelers. Two-wheelers are a lot more competitive space, so you see the share price movement as well. The growth has not been so good. The price movement has not been been so rewarding to the shareholders compared to other sectors. So you differentiate those two. Leave aside iShares. The other three, Bajaj Auto, Hero Motor, etc., have been at the same pace for a long time. So I think auto sector has gained on a company level, and which is where you need to decouple stock market performance of companies versus the economy. Economy may not have given any credence to more manufacturers of cars. Look at Mahindra struggling with automobile. Look at Tata struggling with the automobile segment. So you have a standout Maruti, you have doing well Hyundai, not listed, and you have rest of the pack which has just not done well at all. So sector-wise, it's quite a negative, but I think company-specific, you see a great future for Maruti. It's got India open for it for next 10, 20 years.
Well, and that's showing in the way the stocks have moved as well. Look at this chart on your screen. The last 12 months, M&M has had a decline. Tata Motors has had a decline, though that is probably not just because of domestic factors. But Ashok Leyland and Maruti are doing well, and the stocks have done well. Today's stock of the day, Ajay, we thought could turn out to be GAIL with this whole unified tariff proposal. And while it was spoken about, the numbers were not quite laid out in the open, and if the event does happen, maybe it will react too. What are your thoughts?
Sorry, come again. I just missed your. I couldn't hear the last line now.
The unified tariff proposal,
what company
Ajay,
is that?
And GAIL with the consultation paper for the unified tariff, unified pipeline tariff for natural gas.
See,
what would it mean for GAIL?
Yeah, okay, GAIL. Yeah. See, I think it's a great upside for GAIL because one, of course, it's literally a monopoly in the country, so you can't go anywhere with it. So the question is you have a unified pricing, which will give him a little bit of advantage. Not so great, but I think the trick is here is GAIL is a simple one-trick pony. That gas is going to be the cheapest thing in the country. It's a sole monopoly at this point of time. Rest are all distribution companies. So even in spite of the unified policy, I don't know whether it's be a positive or a negative because we don't know where the price will settle. But the point remains that it's a monopoly. Where do you go for gas? You have to go to the guy. He's making phenomenal returns. So whether you look at GAIL, whether you look at distribution company like Indraprastha Gas, I think they're all monopolies at this point of time. A commodity monopoly, which is a necessity, cannot go bad in an open economy like ours, and where economy where the government wants resources and therefore will help this company, whether it's oil company, whether it's gas companies, to keep raising prices to raise resources. So leave aside the development of the policy. I think as a stable company to invest in, gas companies are a wonderful place to be.
Okay. Well, our research team tells us that, this is for the first time today that all three oil marketing companies will be a part of Nifty. So great time for oil and gas sector really with liberalization, decontrol, and also oil and gas prices moving up. Are you looking to add on every decline? And if so, what would you buy?
See, we have a position in the stocks. So to that extent, we have a disclosure on this norm, including GAIL and Indraprastha Gas. The point is here is at what price do you start accumulating? That's the key point here, because if you're not in the stocks, you got to enter at the right stage. Otherwise, you're going to not make a spectacular return. These stocks, let's not forget, have run up 2 to 3 times in the last 12 to 18 months. So you got to be careful in your expectation from this. That's one. Number two is at this point of time where politically the fuel prices have got center stage. Elections are looming in various amount of states. I am not sure, although the concept policy is that they will pass on the cost increases, I'm not sure that's going to happen in the next 12 to 18 months. We have seen it, it's not happened in the last 1 week or so when the oil prices spiraled up. So my guess is that the next 12 to 18 months, you may see underperformance out of these stocks because political compulsions may drive some of the economic decisions in these companies and you may not get the full benefit of it. So while we are holding a position, I'm not adding into it or not advising adding into it because we believe that the next 12 to 18 months is not going to be greatly advantageous for this company in terms of profitability because political compulsion will count. And let's be honest, after 3 years, oil prices are center stage in the economic and political discourse. You can't divorce that reality from the fundamentals.
Well, so good politics may not be good economics, at least for the oil companies or PSU oil companies. That is what Ajay thinks. But let's go across to our research team and talk about some more sectors. There is metal, construction, real estate, banking, lots of sectors in news. We have Shraddha, Agam and Nikki joining us. Shraddha, stocks and news first of all.
Well, yeah, to start off with, you have HCC where the focus will remain on the company because the lenders to its unit, Lavasa Corp, have involved SDR, that is strategic debt restructuring, in 2 of Lavasa Corp's units. What will this mean? It will mean that there will be some partial conversion of a loan into equities, and there will also have to be some capital infusion which will have to be bought by a financial or a strategic investor. So keep an eye out for that name. Shreyas Shipping, they've signed a MOA for acquiring 1 multi-purpose vehicle and 1 container vehicle. The delivery of both these vehicles is expected sometime in the middle of October. Financial details are not disclosed, but this small cap stock has risen as much as 30% since the start of August itself. You have EPC Industries. Now this is a micro irrigation manufacturer. They have said that they have seen some declines in sales volumes since July, and that was owing to the delay in rollout of pricing guidelines by the authority, and hence it impacted the issue of new work orders. Now the company is saying that they will try to recover the loss of volumes in the balance 2 quarters of the financial year. Additionally, the director of horticulture at Pune, they have registered EPC Industries as for a period of 5 years as a micro irrigation manufacturer. Now this sets aside an order that came last year which had deregistered the company. So now EPC Industries will be able to, it will be eligible for participating any subsidy related business in Maharashtra. It's a 450 crore kind of a market cap company, so I don't know how much it will react. And on the back of bulk deals, you have SBI Mutual Fund which sold 32 lakh shares in Tata Motors DVR, that was excluded from Nifty with effect from today. And you have PNB Paribas Arbitrage which has sold 0.95% stake in Equitas Holdings.
So lots of mid and small cap stocks to track when actually, mid and small cap stocks are trying to kind of bounce back from lows. Agam, what are the interesting reports that you are reading today?
Well, actually, I'm going through Titan because it had a quarterly update yesterday. Now, quarter 2 is a seasonally weak quarter for Titan because, there aren't too many festivals, and also the inauspicious period, because of which the sales for jewelry are relatively less. Of course, we've also had the disruption from the GST implementation, and also the Prevention of Money Laundering Act applied to the jewelry business is something of an impediment when it comes to jewelry sales for this quarter. But despite all these difficulties, the management has suggested that they have continued to gain market share. Based on this quarterly update, let's see what the brokerages are saying. Firstly, you have Motilal Oswal. They maintain the neutral stance. They have maintained the price target at around 590, and they suggest that watches segment has done well. CLSA maintains a buy, and they have put a price target of 700, and they are also of the opinion that it is the best pick in the consumer space. And finally, when it comes to JP Morgan, maintaining a buy stance with a price target of nearly 620, and again they are of the opinion that they will buy and add Titan on all dips. But on the whole, no one has really changed the stance, and they are fairly constructive on Titan going forward.
Okay, moving from Titan to Ambuja.
Yeah, so Ambuja Cement Management spoke to Deutsche Bank, and it said the 5 key takeaways of business update is they were expecting an improvement in cement demand in quarter 3 as well as quarter 4 of this calendar year, driven by rural economy. It sees, in terms of channel check, it sees a double-digit growth in the eastern region, recovery in north and west, and it expects subdued demand to continue in south. In terms of guidance, 6% volume growth guidance for this calendar year 17, as well as 7 to 8% is what the range is for CY 18. In terms of the fuel mix, now the company intends to increase its use of alternate mix to 8% from 4% currently, and also limit its dependence on imported fuel, that is coal plus petcoke combination, to 60% from 67% earlier. It continues to maintain its focus on increasing share of premium products and sales mix. Overall, its view is it has retained the target price, a hold rating and a target price of nearly 250, which means a downside of nearly 7% from the existing level. It says that expiry of sales tax incentives in CY20 is expected to hurt both the earnings growth as well as the premium valuation that Ambuja Cement is enjoying as compared to its peers.
Well, thanks a lot, Nikki, Agam and Shraddha, for all the details. Ajay, what's your thought on cement? First of all, as we got some details from Ambuja management, how do you really look at it? Are you looking to buy anything in this sector?
Well, cement should be good. The price correction in the prices of cement has been over by and large. And if the government says that they're going to spend so much more money and they might even front load the first quarter, you might see a lot of offtake picking up. I think real estate is turning around a little bit. So by and large, the sector is comfortable. Luckily, you have now only 5 or 6 companies to work with. So the competition among them itself is not so very good, not so stiff at this point of time. So, sectorally, there is no problem with the thing. I think a lot of stocks are doing well at this point of time, including the people who are in South India, where price correction is good, but stocks are good. North is good. So I think cement as a sector, it's a comfortable buy, but I doubt it will outperform the index. Now that's where you have a problem, that when you allocate capital, you got to allocate capital to sectors which are going to outperform the index. I wonder whether cement as a sector in the next 12 months is going to outperform the index, because while we are announcing lots of new announcements, the new plan, the highway, etc., a lot of the old projects are also falling off in terms of the completion and or stopping or whatever. So demand-wise, I'm not seeing a great growth story out there, and therefore price should be static. So yeah, it's an okay buy, it's an institutional buy. I wonder if it's an individual investor buy.
Well, okay, that's an interesting bifurcation that I think Ajay has done for the benefit of our viewers, and thanks for that, Ajay. I know, Ajay, we have to thank you, but before we let you go, there's a very interesting Bloomberg terminal insight that I want you to react to. We'll also get in Samit Chavan and Kunal Saraugi in this discussion, but it's that time of the show where we get you the Bloomberg edge. Apollo Tyres has snapped its 5-day losing streak, and the Bloomberg terminal, has an interesting chart today for Apollo Tyres. Jayesh, what are the charts indicating? Has the trend reversed for Apollo Tyres?
Morning, Niraj. Well, it looks like because there has been an interesting chart pattern formation on the Bollinger Bands, which is called as the outside-inside pattern formation. First, let's have a look at how the Bollinger Band actually works. It shows you the expected trading range within which the price has to, on volatility, and it plots 3 lines, which is the upper band, the lower band, and a moving average. Now the upper band and the lower band are essentially 2 standard deviations up and above, below the moving average. So how do you decode the entire Bollinger Band? Is when the bands expand, it is called as a trending market, and when the bands contract, it is called as a sideways market. Now let's go to the outside-inside pattern formation that has actually happened. What you have to look for is that one of the candles has to close outside, and the immediate next candle has to close within the band range. Now I'll show you all of this on the chart of Apollo Tyres. So that is where we have, as of 2 days back, you can see this red candle which closed below the yellow line, which is the lower band, and the immediate next candle, which is the green candle, as of yesterday, has closed above the yellow line, which is the lower band. And traditionally, we have seen that when this kind of pattern has been formed, we see a bounce back. Either it is from the lower end or from the higher end. So in this case, we can see if it bounces back to even the mean average, that is about 255, and current price is at 243.
So, and Jayesh, very quickly, how has this indicator worked for Apollo Tyres in the past?
It works very well, Niraj. So in the last 1 year, if you see, there have been 9 trades that have got generated, out of which 5 have been positive trades with a total return of about 30%.
That's interesting. Thanks a lot for that, Jayesh. Ajay, before we thank you, we've discussed autos at length. What about this specific auto component pocket, tyres, and with the fact that the rubber prices have come off in a hurry as well?
Well, again, this is one sector which has got just 3 or 4 stocks to buy with. So if you're, and there's not many choices. So you got 3 companies who are essentially the big players. MRF, you don't buy for speculation. MRF is a buy share you buy for investor, and that's a kind of 70,000 rupees is not ordinary investors who goes to buy the share. The rest 2 are more speculative buys, because in the sense that they fluctuate a lot, there's a lot of volatility in the stock. And again, back to the point that you need to catch the trend out here, and I think the trend out here is in the economy. The trend out here is that you need to focus on sectors where there is a large amount of small and SMEs in the sector which are going to fall off the wayside post the GST scenario, and therefore you gain the market share. Tire is not a sector which had number of SMEs, etc., which can gain from it. So when you are allocating capital at this point of time, you need to focus on those kind of companies, the big caps, the big consumer companies, etc., which are going to get substantial traction irrespective of the growth of the economy. Tire is linked purely to growth of economy and automobiles at this point of time. So you got to be play a careful game there. But there are several sectors now which are open where it's very clear visibility of growth and earnings, and you're going to be safely there. So I think this is a good time. And I know I'm not politics apart or the socialist aspect apart. The big companies are going to get big in this market, and that is where your focus should be. And focus on companies which are large SME competitions, which is going to gradually fade out.
A few names, Sajay, if you like to mention the companies you're talking about that will stand to gain.
See, I'll give you a small example. We are holding in that, but I'm taking an example. Please don't take a recommendation. Take a company like Bata. You have small shoe shops across this country competing against price, competing with duty issues, competing with tax, etc., etc. Now, that's one industry which is going to consolidate in a big way in the next 2 to 3 years. Why 2 to 3 years? I think you'll see the repercussions happening in the first year itself. Same with the jewelry system. The jewelry companies are going to do well. This companies are going to do well. The garment companies are going to do well. These are sectors which are going to gain tremendously from this whole GST scenario which is emerging, and that is where you need to be positioned at this point of time.
Thanks a lot, Ajay, for taking time out. Samit Chauhan, Chief Technical and Derivatives Analyst at Angel Broking, also joins us. Samit, you are choosing BEML this morning?
Yes, the stock has corrected severely in last 3-4 trading sessions. However, if we look at it with a slightly broader perspective, 1640, 1620 seems to be a very strong support zone. And since last 3 days, this stock has been making lows around this important support level. So we would expect some kind of bounce back in this stock. We don't expect aggressive targets as such, but we would expect a decent bounce back towards 750 in BEML. It can be bought with a stop loss of 1640.
Kunal, we'll take your index strategy in a bit, but quick 20-second answer. I see an interesting idea, NIIT Tech. It's been a strong stock. Why do you like it?
Well, I think NIIT has been running away for the last several days, and it's again bounced back on the charts. I expect for the stock to continue its bullish momentum, and I won't be surprised if it ends up at 600 rupees, but my first target is 570. One should buy NIIT with a stop loss at 540. I see the stock going to those levels very quickly.
Okay. Jamed, stay on. Pre-open rates right here. We'll take in your index strategies in just a bit as well. But here are the pre-open rates. We won't have the 1.5% uptick on the Nifty for sure. But yeah, what the Sensex is showing could well be possible. We could have a start in the green, which is interesting. Specific stocks, I think GAIL, and let's see if there is some heightened reaction to that stock in the early morning pre-open rates as well or no. In a bit, we'll also show the currency, by the way. But this is a big start for GAIL. We may not have a 10% uptick, though I could well be proven wrong, but we'll have a start in the green for sure. So watch out for GAIL. Also watch out for stocks like Titan and the IT names in particular in today's session. Maybe, just maybe, there could be a further reaction. Kunal was talking about NIIT, but watch out for HCL Tech, watch out for TCS, and watch out for Tech Mahindra. I think there's some natural similar lines of vertical delivery that these companies do to Accenture, and those numbers might well keep these stocks in focus, though for now IT is actually showing a reverse trend, not really reacting too much in trade. Maybe Wipro, which is actually reacting conversely to what Accenture's results showed, so to say.
Yeah, actually. Let's look at Lovable Lingerie, where board is going to consider share buyback proposal and see how this stock is reacting. The board meeting has been called next week on 6th. Stock is up 5.5% this morning. Indian Metal and Ferro Alloy, there's a small cap stock we should really look and really keep in mind. This stock has been an outperformer in the overall metal sector, and now there's a news that 2 subsidiaries or the group units will be merged with the company. Stock is up around 2.5% right now. We should also have a look at Vakarangi, where promoters have hiked stake, and Godrej Properties that acquired a project in Bengaluru. HCC, of course, is a stock to watch out for, and let's see what happened to it after the SDR triggered on Lavasa. HCC is up 5.5%, so probably a favorable resolution is what market is kind of factoring in on HCC. Also a look at Titan and IOB, I guess. Okay, what's happening in rupee this morning? Let's have a look at rupee also. Dollar has weakened a bit, but rupee, if you look at, is 65.35. Is actually losing 16 paise.
So isn't that a good start from 65.51 to 65.34? So that's about a 16 paise gain. for the currency this morning. So in line with what the dollar weakness was suggesting, Pradeep, you would expect this is par for the course?
Yeah, I think it should recover. 66 was a level that our experts have been talking about, and now if dollar kind of holds steady and doesn't really move towards $95 index to talk about, I think the rupee should also hold steady, and that's actually good, because we come back on Tuesday, and Wednesday is the all-important event of RBI policy, and the RBI will be under tremendous pressure to cut rates because of what's happening to economy, and we're all talking about it.
I would doubt though.
Yeah, that is because of rupee. I think rupee would be one significant hurdle, in the way of any kind of even a dovish commentary, so to say.
Yeah.
So let's hope that rupee holds steady and there is no extra pressure on RBI to sound hawkish, because that would not be good for market sentiments.
Yeah, but before we move further and get in some trading ideas from Kunal Saragi and Samit Chauhan, and they've been waiting by patiently, and thank you so much for doing that, gentlemen. But we've got a specific news flow to discuss with, and that is on GAIL. And Deven Choksi of KR Choksi Securities joins us on the phone line to talk about this development. Deven, how have you read into this proposal and what it could mean for GAIL?
Yeah, good morning, Niraj. Well, I think if you go inside the proposal and you find out, I think this is something which GAIL has already proposed a long time back, I think, for increasing the tariff to a uniform tariff, I think, and they have proposed it around 57 MMBTU, 57 to MMBTU. Largely, the purpose behind this is twofold. On one side, government wants to extend the natural gas pipeline to the far-off places, and they want to see the share of energy mix in the overall energy portfolio to 20% by 2030, which is currently 6.5%. So that's the first viewpoint, I think, that the government carries. And to fulfill that viewpoint, I think the GAIL has suggested that cross-country pipelines in which they have got the ability to supply gas, currently due to differential tariffs, the far-off places are basically being charged at expensive price to gas. And as a result of which, I think this becomes uneconomical for the places which are relatively far off. To give an example to this particular subject, I think in the proposal that the GAIL has said, the far-off places, I think, currently ends up getting the gas at around 120 to 250 rupee per MMBTU. Whereas I think the short distance, I think they're supplying gas at 18 to 30 rupee to MMBTU. So frankly, I think the disproportionate, I think, levies, I think, between the shorter distance and the longer distance is something which they want to bridge, and that's why they have put in a neutral tariff. Now, if they do implement this particular tariff of what is suggested by GAIL, our calculation, back of the annual calculation says that it could result into 40% increase in the what we call revenue book of the GAIL, and so it could have the positive impact onto the balance sheets of the GAIL. So this is how I think we summarize this. We still need to look at a lot of data which they can supply eventually, but at just now I think it's the calculation that we carry with us.
It's changed, but 40% in the revenue book, that's a brilliant thing for GAIL if it does go about. Deven Choksi, really appreciate you joining us this morning with that quick assessment. I'm sure you have a busy morning. We'll leave you at that. Thanks for joining in. So watch out. There's a fundamental reason why GAIL would be doing what it in all likelihood will do this morning. The question is, how does a trade on GAIL work then? Kunal Saragi, if GAIL indeed starts off higher, about 25 odd rupees higher from where it was yesterday, is there still a position that somebody can initiate on GAIL?
I would think so, Niraj. If you look at the structure for GAIL, it's got a pattern going for it, which is called a cup with handle pattern. And that gets executed the moment the stock manages to cross 410. So going by what you just said, I think the stock might actually open at around 420 or somewhere close to that. If that happens, I think it's a clear buy on GAIL. And I think I won't be surprised if it ends up at close to about 450 going forward. So one should definitely look to buy GAIL in case it opens with a big gap up.
Okay, so if it opens above 410, that's a breakout where one should really buy the stock. Well, other trades today, Samit, you have given a short call on Canara Bank. What's the target? What's the strategy?
See, clearly the entire PSU banking space has been underperforming of late. And Canara Bank, we saw a decent correction from the high levels of 345, 350. And since last couple of days, the stock has been trading below its 200-day moving average. So this is a clear sign of weakness, and we would expect this stock to slide further. Our immediate target for Canara Bank would be around 302. Any minor bounce back would be a good selling opportunity, and one can short sell this stock with a stop loss of 323.5 on a closing basis.
Okay, and Kunal, you have chosen PNB as a short, so looks like there's a consensus short PSU banks.
Well, PNB has got a very bearish structure, Pradeep. I think it's got a head and shoulders forming for it. So I think there is a very high probability that you probably will see the price going down. So I'm short on PNB. I think one should look for targets of 125, place a stop loss at 135. In case the markets open with some bit of strength today and PNB recovers a bit, I think that would be the best time to go short on PNB with a stop loss at 135 and a target of 125.
Okay, just a quick update here. Rajveer is asking via Periscope what's the view for Ashok Leyland today. Raj will give that answer in just a bit. Anil Salaria has asked on whether the view, or what's the view on Facebook, Yes Bank rather, on our Facebook feed. And I think Anil has been asking this question for the last couple of days. So we'll make sure that we answer both of these questions before both Samit and Kunal head off. But I think we need to do quick checks on two fundamental pieces of information. One is crude prices with heading higher. I think air carriers might have to shell out more for aviation turbine fuel come October. The prices get revised over the weekend. Samit is here to tell us the quick math and the calculation. Samit, good morning.
So the revision in the aviation turbine fuel prices are expected to come in on the 1st October, and we might see a hike because of the surge in Brent crude prices. Now Brent crude, which is the Asian benchmark, is at a 2-year high and is trading at around $57 per barrel. And the October month hike could be the 3rd consecutive monthly hike for the financial year 2018. In 2018, we also saw a hike in August and September. Now, if you see, fuel cost nearly eats up 1/3 of an airline company's revenue. For Indigo, the fuel cost as a percentage of revenue has been in the range of 30 to 37% in the last 5 quarters, depending on the average fuel cost in that quarter. Now, for SpiceJet, it was in the range of 26 to 34%, and for Jet Airways in the range of 23 to 29%. Now, whenever the fuel cost as a percentage of revenue was higher, the margins of the airline companies have seen a major fall. Now, in Q2 FY17, fuel cost was 37% as a percentage of revenue, and in that quarter the margins for Indigo were as low as 23%. For SpiceJet, when the fuel cost was 31%, margins were at 24%, and for Jet Airways, when fuel cost was 27%, margins were as low as 7.5%. Now, if you see in the last quarter, where the fuel costs were lower as a lower percentage of revenue, for Indigo it was around 30% as a percentage of revenue, and margins were as high as 34%. For SpiceJet and Jet Airways, when fuel was 29% and 27% of revenue, margins were around 22% and 13% respectively. So if you see, whenever the fuel cost has been low as a percentage of revenue, margins have been boosted, and this is not going to be the case for the Q3 and Q2 if you see.
Okay, thanks, Somit. Jet is all set to open weak by 1.5% or so. We'll talk about it later. But Darshan Mehta joins us with the big brokerage calls of the day. Darshan.
Pradeep, the first report that we'll speak about is Motilal Oswal initiating coverage on PNB housing. The target price they have given is 1675, which means a potential of 20% upside here. They're saying that the asset quality is one of the best among peers, and as far as growth is concerned, they're saying growth, asset quality and improving ROE is justifying the premium valuation that PNB housing has. They expect the net profit to grow at 40% CAGR over the next 3 years. The next one is Kotak on Apollo Hospital, where they've cut the target price down to 1050 from the earlier 1200. What they're saying is the fact that they've cut the EPS EBIT estimates by 8 to 10%, and they believe that the company's turnaround in FY19 looks difficult because of regulatory issues. There are issues as far as their Chennai hospital is concerned, and the upfront cost that they have had as far as their Navi Mumbai hospital is concerned. Finally, Credit Suisse has come out with a note on Dr. Reddy's, in which they have maintained and underperformed but cut the target price to 1950. They're saying that there is high erosion of prices in the US, and they say that price erosion will be close to 12% for each year for the next 2 years. They're saying very high product concentration is there in the US, and that is something that makes them uncomfortable.
Thanks a lot for that, Darshan. The pre-open rates have settled about a minute and a half ago. Let's bring up the Nifty and the Sensex before we tell you all that you need to know for the morning. Just bring up the Nifty and the Sensex and show you what's happening. So yeah, a start in the green. comfortably above 9800, 0.5% higher. The Sensex suggesting about 1/3% or 1/4% really. So we'll have a start in the green. Let's tell you all that you need to know today. And the Nifty returns to 50 stocks. Bajaj Finance, HPCL and UPL are the new entrants, while ACC, BOB, Tata Power and Tata Motors, DVR, make an exit from the index.
PNGRB has put up a consultation document on unified pipeline tariff, proposing a 60% hike in tariff by GAIL if approved. GAIL's earnings are likely to get a 50% boost according to brokerages.
Titan says that its performance in Q2 has been close to expectations. The company has also said its jewelry business has gained market share despite the slowdown.
Mid-caps like HCC, Vakrangi and Lovable Lingerie will be in focus on the back of various news triggers today.
And among brokerage notes, Motilal Oswal sounds bullish on PNB Housing Finance, while Credit Suisse has cut the target price for Dr. Reddy's to 1950.
And lastly, Brozone International, S. Chand, Pennar Engineering and Bodil Chemical will be meeting investors today.
Well, that's all that you needed to know about trade today. But if you wanted to bet on one stock for the morning, which one would that be? Samit Chavan, one stock call, the top stock call for this morning.
See, we are a bit cautious as far as index is concerned, but we still believe that before that we'll have some kind of consolidation, and within this consolidation you would see good momentum in some of the mid-cap counters. We have been liking Deepak Nitrate since last 3-4 days, ever since it broke out from its multiple resistance zone 180 with sizable volume, and since last couple of days we've been witnessing some kind of buying interest at lower levels. So we would expect this stock to climb from current level. 215 is our short-term target for Deepak Nitrate. So we would be closely watching on this stock, and we have been recommending this particular stock to our clients as well. So one can buy on any minor dip. 183 seems to be a very strong support, so one can keep a stop loss somewhere around 183.4 and go long for a target of 215.
Okay, Kunal, your top call?
Well, it's got to be Coal India. I think the kind of structure it's got, it's formed a base for itself. We've seen elevated volume levels at lower price levels, and it's formed a pattern which is called an inverted head and shoulder. It's broken out in yesterday's trade. I expect the stock to get to 280 without too much of a problem. So I think one stock that you should buy right away is Coal India.
Okay, so that Succint Coal India is the top call from Kunal Saragi as well. 12 seconds to go before the markets start, and promises to be an interesting day of trade simply because we will be back to Nifty 50 from Nifty 51, if you will. But we'll have a start in the green, which is actually a good sign. These are the opening rates. About 0.5%, 0.4%, 41 points for the Nifty, above 9,800. The Sensex, about 1/3%. The Bank Nifty has gained about 100 points as well, so comfortably above the 24,000 mark. Moving on from the levels that it stretched in trade yesterday. The broader end of the spectrum should come up on your screen, and about 0.5% apiece for the BSE mid cap or the NSE mid cap and the BSE small cap indices. So it's a start which is in the green. I'm sure the market bet would be positive. In a few minutes we'll know. But let's pull up the Nifty 50 heat map. Nifty 50 heat map, I repeat, not Nifty 51, but the heat map will come up on your screen and we'll see the color. I would presume that there's a lot of traction on the green as opposed to the red. And yes, almost all stocks in the green. There are about a handful of 8-10 stocks, but the top loser is Bharti Airtel, which is down only 0.5%. So absence of losers in early morning trade. But what is gaining, I think we should pull up GAIL. That deserves a mention on the wall by virtue of the move that it is making. 6.5%. So in line with what the pre-open rates were indicating, and 422. I remember Kunal Saragi saying that it might not be a bad idea to go out and initiate a fresh long at this level. Watch out for GAIL. That seems to be doing okay. I just want to get up the Nifty 50 exclusions and inclusions and see if there is indeed a big reaction to that happening. So inclusions, Bajaj Finance starting off about 1% higher, HPCL mild gains, UPL, the first agrarian stock, so to say, making an entry right now, and that one is about 0.5%. But the ones that have been excluded are not having a bad day either. So ACC up about 1%, BOB up about 1%, Tata Motors, DVR up about 1%, and Tata Power. So the market mood lifting almost all of these names in the session today. What else? I think, as we mentioned, GAIL, of course, remains the limelight because of this unified pipeline tariff for natural gas. So that one remains top draw and now up about 7%, so steadily gaining. Accenture numbers and the fact that they've beaten estimates. Let's see if the IT pack is excited or no. HCL Tech is, Tech Mahindra isn't. The interesting bit is that TCS is not showing any kind of excitement, just about minor. It's actually very, very flat in the session today, so nothing out there for TCS.
EPC came out with commentary, very weak micro irrigation commentary for EPC. So Jain irrigation is one, but EPC is the key one, which could probably be down today. Management has suggested continued market share gain for Titan, and this one could be an interesting one as well. Bring up Titan. No, not too much of a reaction. I just want to see a quick check on some of the top movers in trade yesterday. And no, they're starting off flattish. Adani is down. IRB, which had a big volatile day, and that one is down about a couple of percentage points. Scient, though, marginally in the green. Pradeep, what else are you spotting?
Gail, but have a look at Petronet LNG and also Gujarat State Petronet. These two stocks have also moved up with strong volume this morning, and also you have Hindustan Construction moving up after bankers triggered that SDR in Lavasa. That's Hindustan Construction subsidiary. So stock is quoting strong, up 6% plus this morning. You also have Indiabulls Real Estate bouncing back strongly. You have some shipping and related stocks, shipping corporation of course, but also dredging corporation, shares shipping. These are some of the stocks that have been quoting strong. Future retail is up roughly 4% or so, and also you have Rupa and Company, so Hojari is also buzzing. IFCI is another trader's favorite that has opened strong. Let's see what happened to Jet. The Jet was in pre-open was down around 2%. Let's see if that stock has moved up. Also Bombay Dyeing. Bombay Dyeing is correcting down 3% now, so no lower circuit. That's some respite. IRB Infra after yesterday's rise is correcting, some profit booking down 2% or so. And you also have Oil India, which is cooling off. Container Corporation is yet another stock which is down this morning. So few losers. These are some of the significant names, but Nifty holding above 9,800.
Opening thoughts, gentlemen. Samit, to you first. What are you doing on either the index or otherwise?
See, I've already mentioned my stock-specific ideas, but as far as index is concerned, we are not too optimistic at current level, and we have been maintaining our cautious stance since last 3-4 weeks. We did not participate much in the rally which came after breaking its resistance of 9940 and towards 10,170. And since Nifty broke its important support of 10,043, we have been maintaining our pessimistic stance. And from current level also, we would expect some kind of consolidation before breaking its recent swing lows of 9685. But as far as direction is concerned, we are betting on the much lower levels from current level. We would expect Nifty to slide gradually towards 9500, 9400 over the next few weeks. So we are a bit pessimistic on the market, and we would expect 9900, 9920 to act as a very strong level now.
Okay, so this is interesting. 9840 was the stop loss level on the short call that Samit had suggested, and Kunal has 9850 as his target. Kunal, since market has already opened strong at 9810 odd levels, is it too late to really initiate a long? What would be your strategy now?
Well, I think one can still bet on the markets going slightly higher from the current levels, Pradeep, although my target was 9850, but I think even 9900 might actually be on the cards. We've seen a bit of a pullback. I see a lot of action in almost all stocks across the board. A lot of stocks are breaking above resistances, so I see the markets going up some more from the current level, so one can actually initiate a long position at the current level.
You revise your stop loss now because 9720 is some 90 points below the current levels.
Well, I think the best place to put a stop loss would now be 9740. This is the spot level on the Nifty, and this was the close, I think, for the markets a couple of days back. So 9740 should be a stop loss. 9900, I think, is the target now.
Guys, we'll have to play a bit of a rapid fire here. There are some questions that have come on our social media feeds. I want to take those. Samit, short answers. Yes Bank, what's the strategy here?
Any bounce back towards 362, 365 would be an exit opportunity. 365 seems to be a very strong resistance, and we would expect this stock to slide towards 340.
Okay, expect to slide towards 340. So, Samit, by any chance, do you track J Corp? It's had a big move in the recent past.
No, to be honest, we don't track it, but looking at the overall structure and the kind of selling that we've witnessed since last couple of weeks, certainly, short-term trend looks weak, and we would expect this stock to slide gradually at least towards, 195 levels.
Okay, and Kunal, lastly, very quickly from your end, 20-second answer, Bharti Infratel. Strong move there, a query there on Bharti Infratel.
Well, Infratel, I think, is one of the stocks that's broken out and has been outperforming the markets last few sessions. I see the stock going to 420 levels. So if one is holding long positions, I would advise them to hold on. 420, I think, is on the cards for this one.
Okay, gentlemen, thanks a lot for that. Thanks for joining in today and giving us your thoughts. On to our big fundamental voice for the day, a special guest for the morning. India may not be an investor's darling anymore. That's the word coming in from CLSA, as foreign fund houses overweight positions have started to come off. We've seen this trend across. It is strong domestic flows, of course, which are keeping the markets afloat. So what can get India back in favor? What are the pockets of opportunities in Indian equities? Let's talk to Mahesh Nandurkar, India strategist at CLSA, joins us right now on the show. Mahesh, so good having you. Thanks so much for taking the time out and joining us on BloombergQuint. It's our launch fortnight, and it's a good thing to have you here. Where are your positions right now, Nahesh? I mean, how are you positioning yourself?
Thank you very much to have me here.
Okay, now, of course, it's a pleasure to have you. What's the stance here, Mahesh, when you're talking to clients on India?
Well, what we've been highlighting is that, two things here. One is, obviously the valuations, which are clearly on a higher side. And which is probably making many investors a little bit uncomfortable at this point in time, and which is fair because the corporate earnings growth has not really been very exciting, and probably it'll probably take a quarter or so more from here on to get the corporate earnings growth back in track. So my sense is that the foreign institutional investors, which have been reducing their India weight, I would say for the last 12 to maybe even 24 months, and while India continues to remain an overweight for the foreign investors, but I would say the extent of overweight has probably come down to the lowest levels that we've seen over the last 4 to 5 years or so. And my sense is that the foreign investor interest will probably come back only when we begin to see improvement in the corporate earnings, which I think should happen by the December quarter, because anyway the base is going to be quite low for December. In fact, base is going to be a low base for the subsequent March 18 and the June 18 quarter as well. So for the next 2-3 quarters, I would say that the earnings growth should be helped by the low base starting December quarter. And by that time we would have seen some of the large equity offerings to be behind as well. So maybe for the next couple of months, the market could probably kind of stagnate or consolidate. But I don't really see any reason to panic, and I would still classify this as a buy on dips market.
Okay. So if you look at it, the 10,000 level on Nifty and 25,000 on Bank Nifty is where, we have been struggling for close to 2 months now. So like you mentioned, in 2 to 3 quarters, probably earnings will come back. But will they be strong enough to justify these levels and bring FIIs back into the markets?
See, the thing is that what we have as a house view is that the US dollar will continue to remain weak, and therefore it will continue to be the funding currency for the other emerging markets, including India, and which is what has been happening generally speaking over the last 6 to 8 months as well. But as we discussed, India has not really participated in the inflows that have gone into the emerging market funds, as the India weight has kept on coming down. Going forward, we continue to believe that the emerging markets will continue to see flows, and my sense is that the December quarter, where the YOY earnings growth could very easily be between 15 to 20%, and a similar number for the March 18 quarter as well. I think that should be strong enough to attract the attention of the global investors. I mean, mind you that the numbers that I'm quoting, 15 to 20% growth for December quarter or for the March quarter, is more to do with the low base. Also, there is some gradual improvement or gradual stabilization in the economy post the GST as well. And also what we feel is that gradually the housing market will also begin to improve. So I think all these factors put together, maybe, as I said before, the next couple of months will continue to see a bit weak or lackluster, but subsequently we do think that the corporate earnings growth will be strong enough to attract the foreign investor interest.
Mahesh, very interesting note that has come in on the primed and ready, authored by you. 2 or 3 points, and we had discussions with respective or relative managements over the course of the last few days. You're mentioning that housing sector is at a tipping point to be the next big growth driver for the economy. We were speaking to Arun Nanda of Mahindra Life Spaces. Arguably, it's the low income or a low cost housing which has any strength, if at all, right now. And he mentioned there too, the offtake has been very, very patchy. It's not been a consistent trend. He didn't know when it will become a consistent trend in the first place. Why do you think that this could be that big trigger, and what companies, if at all, in the listed space benefit out of this?
So the reason why we think or why we are optimistic about the housing segment is that first of all, we have been doing this affordability analysis for the last several years. In fact, and our analysis throws up a number that for the affordable segment, that is, let's say the houses costing less than 40 lakh, 50 lakh or less, the affordability as measured by the monthly mortgage payment as a percentage of income has gone down to the lowest levels that we've seen in the last 2 decades. In fact, very close to what we were positioning back in, let's say, 2003, 2004, which was the bottom of the previous, property market, bottom. And, we feel that this affordability will be really the key driver. What we need is a trigger point, and that trigger point we feel has been provided now by the government stimulus for the housing sector, be it in the form of home loan subsidy, or some of the other subsegments, of the Prime Minister's Awas Yojana scheme. So we feel that that government push will be the trigger, which will kickstart the housing market. Obviously, the near-term headwind which is holding back the growth recovery in the housing market, according to us, is the implementation of RERA. We have seen a few states implementing that already. A few more are in the process of implementing. So once again, this is going to be a bit of a disruptive, change, like similar to what we saw in case of, let's say, demonetization, or let's say in case of GST. But this again is going to be short-lived, according to me. And RERA in the end will kind of end up giving more confidence to the buyers to buy and invest in under construction property. So as I said, maybe give 1 or 2 quarters, and we should ideally be seeing a housing market beginning to start improving.
How do you really play this story? Will you advise buying into some of the developers, or would you rather play it indirectly like most big players have been doing so far through housing finance, cement and suppliers, vendors, so on and so forth?
No, I would say that the whole housing-related chain looks pretty attractive. Starting right from the housing finance companies, and then the building material companies. I mean, not just cement, but there are some of the plumbing pipe companies as well. Then you also have some of the household product companies, more on the consumer durable side and the lighting side, etc. So those would also be a play, and of course, finally, the developers themselves. Within the developers, we'll obviously have to be kind of more selective. I would basically go with the developers that have a greater share of residential portion of the business, or the residential business contributing greater share of the total value. Also, I would say that the demand supply situation in the NCR is still not that good. So I would probably limit myself to, let's say, the Mumbai based or the Bangalore based developers to play the story.
Sustained resurgence needs capex recovery, but almost every large private sector player is skeptical of this coming back in a hurry. Are you still advising your clients to play this theme?
Right. Yeah, see, the thing is, the capex cycle, will be slow to come by. The capex cycle recovery will be slow to come by because, what we feel is that the government, has kind of maxed out, on its expenditure. I mean, unless the government considerably, loosens its fiscal stance, which is probably unlikely at this point in time, I don't think the government really has a lot of scope to start pump priming the economy or the capex. Also on the private sector side or the private corporate sector side, there are a few sectors where we are beginning to see some action in terms of investment, notably steel. We have seen a few companies in that sector coming up and making announcements and kind of starting to work on the plans. But yeah, broadly speaking, even the private corporate capex is unlikely to start in a hurry. But as I mentioned before, housing is actually a very large part, of the capex in the economy. A lot of people, tend to ignore housing, when they talk about capex cycle. But I just want to remind that housing and the household sector accounts for 40% of the capex in the economy, and in fact, as such, it is actually a more important player than the government and than the private corporates as well when we talk about the investments or we talk about the gross fixed capital formation. So our source of optimism on the capex cycle recovery is based on the housing sector beginning to improve, and once housing sector begins to improve, it'll kind of pull with itself a lot of other industries as well. I mean, for example, if you take cement, as an example, over the last 3 to 4 years, the industry demand growth has been pretty weak at about 2 to 3% in line with the supply additions, and therefore the overall utilization rates have remained quite low at about 70% or so. But once the housing begins to pick up, we feel that the cement sector demand could improve in volume terms to about 7-8%, whereas the supply additions will probably still be at 2 to 3%, which will take up the utilization rate from 70 to 75 in 1 year and 75 to 80 in 2 years, which is not too far away. So once we begin to see that, we will begin to see capex coming through in cement and, as I said, some of the other industries as well.
Okay, Mahesh, we'll leave it at that. We hope that all of this turns out to be true and more. The markets certainly need that. But thanks for joining us on BloombergQuint and speaking with us. And you can, of course, hear out slices of this conversation and, of course, see the snippets of this interaction during the course of the day on the website and on our social media feeds as well. The index trading very close to the high point of the day at 9825. Gale still holding the leaders back. Take a break, come back with more corporate discussion.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Back with Indian Open right here on BloombergQuint. 2017 YTD has not been a smooth ride for commercial vehicles. The last couple of months, though, have reversed the trend. Can that reversal in trend sustain? Let's talk about all of that and more with Gopal Mahadevan of Ashok Leyland. Thanks so much, Gopal, for joining in and speaking with us. You know, while YTD demand may be low, I think the last couple of months have shown some strength. Do you think that the fall in freight rates and GST adjustments smoothing out will change this demand in the next couple of months and the coming quarters?
We are hopeful that the next couple of quarters should augur well for the MHCV industry, because we have seen a kind of a turnaround over the last couple of months, and while YTD the industry still is lower than what it was for the same period last year, like you rightly mentioned, August was a good month relatively. So I think September, at the moment, the September retails also seem to be positive. So I actually expect that Q3 and Q4 should also do well.
Nomura came out with a report yesterday and they mentioned, Gopal, that their channel checks suggested that over the past 1 or 2 months, there has been a strict enforcement of overloading restrictions on commercial vehicles, led by strong impetus from central and state governments. Overloading was quite rampant in many segments of the road freight. Now, is this a game changer for CV demand in the near term?
I think it's a confluence of factors. What we actually are seeing is the MDV and the tipper sales also going up. So that kind of indicates that there's some amount of activity that has happened on the infrastructure space, especially mining. The second one is, yes, this curbing on overloading is a big positive for the industry. First, as a safety practice. Second one is it also is very positive for the commercial vehicle industry. We have seen that happening in Rajasthan. We have seen that happening in UP, and we have actually seen the freight operators doing much better under the new scenario. So as this thing rolls out on a pan-India basis, I believe that this is going to do a lot of good for the freight operators as well as for the commercial vehicle industry.
The implementation of the e-way bill from October is also likely to accentuate this impact, as it will carry the exact details of goods being carried, making it even more difficult to overload. Will that provide a further trigger, and is that a big trigger in the first place?
See, my viewpoint is that anything that kind of builds an efficiency into any industry is good for the industry. So as we actually become more and more, I would say, streamlined in these processes, that's going to actually bring in further investments by the fleet operators. So the e-way bill is a big positive, and I think that this will also kind of improve the transportation time between towns. When that happens, what is an average fleet operator going to look at? He's going to say that his turnaround time of the vehicle is going to be improved. If that happens, he would say, I'm able to turn my vehicle around faster, which means I'm going to invest in more vehicles. So what also happens is, all of this actually brings in a huge amount of efficiency into road transportation sector. That's the other bigger positive that you see.
And will the festive season only enhance that cheer backed by a good monsoon? Because the sentiment on the ground seems to be quite positive.
I believe so. I mean, some people do in certain parts of the country. We are seeing a pull. That's why I said, I mean, this month when I look at it, the retails are looking much better in comparison to the same period last month. We will have to wait for the full month to complete, because typical of this industry is that a lot of the sales happen in the last 3 to 4 days. So this month looks a lot more promising.
Okay, coming to the financials, Gopal, recently we've seen commodities on the rise. Will this impact the overall operational performance for Ashok Leyland in the quarter gone by?
Well, that's a very simple answer, for a simple question. Yes, if input prices go up, yes, it does have an impact on the performance of the company. The whole thing is, the trick is how efficiently do you manage this commodity price increase? I mean, one is to look at price increases. Second one is to have a judicial mix of the products. The third one is to drive out costs in other aspects of the operations, other parts of the operations, which can help to neutralize the impact of commodity prices. So we are trying our best, but yes, commodity prices is something that we'll have to figure out how to tackle.
Yeah, you certainly will have to. I'm guessing a lot of other companies will have to as well. My last question, on the electric vehicle front, you've started some research. Are you looking at some joint ventures with international players? And what's the timeline for kicking out the electric vehicle segment?
Yeah, I think, we are looking at all options, and there are multiple options in going the EV route. And I think any, step up in technology or in regulation requirements is a big positive for players like Ashok Leyland, because we can showcase our capabilities there. So we would make the relevant investments that will be required, including acquiring partnerships if necessary, making investments. But at the moment, a lot of this is happening is at a drawing board stage in terms of relationships. But we have our plan very clearly chalked out for the EV rollout. We have actually, we had rolled out India's first EV bus, which was called Circuit. This was the first bus also to go to Rohtang Pass without a breakdown. So we have other alternative solutions, including looking at, swappable battery technologies. So a lot of effort is actually going on there.
Okay. We'll leave it at that, Gopal. Thanks so much for taking the time out and joining us and giving us that perspective. So that's Ashok Leyland. Well, he sounded optimistic.
Interesting that he's saying that demand from, say, the mining sector has also started
picking up.
Yeah,
just when you start hearing the hype about a slowdown,
always
you start
happens.
Seeing the green shoots.
Always
right?
happens when
just when you start hearing the hype.
When opinion goes in one direction, you'll always, finally start to see.
I mean, what struck me was Mahesh's note on jobs this morning, right? I mean, the data was really, really interesting.
Yeah.
And he said that, look, we're actually fulfilling all the employment requirements in an economy at a given point in time. So.
The other interesting part of his answer, Ida and Minka, I don't know what you guys think, but his view, of course, he's saying that while we talk about capex recovery not being there, people don't club housing with capex. Yeah. And housing, to his mind, even though Arun Nanda said what he did, Mahesh believes over the 12-month period, housing will really give a big boost, and that will, in a form of speaking, be capex. I mean,
I'm telling you, just when you start calling it a slowdown, right, you'll see the green shoots. I suppose we are lag indicators, not lead indicators, so to speak, right?
They used to joke, right, when you see something on the cover of, Time magazine.
Yeah, it's peeking out. It's peeking out.
Right? The problem is peeking out. Yeah. I don't know if the banking problem is peaking out. Maybe it is. Hopefully it is. IDBI Bank has been in the thick of this problem. They're a bank which has 24% gross NPAs, 50,000 crore. But they're trying their hardest to turn around. They've also roped in the Boston Consulting Group to define a turnaround program. In the midst of this is Mr. M.K. Jain, MD and CEO of IDBI Bank. He's joining us this morning to help us understand what they're working on. Mr. Jain, good morning. Thanks a lot for actually coming in and speaking to us. So I want to start with what you exactly appointed BCG for. Your press release said a broad turnaround strategy, but I think we all know that the turnaround has to start with the cleanup. Is there a specific mandate you've given to BCG, sir?
Let me first briefly touch upon that how in the month of May we announced the turnaround strategy in consultation with our board and the top management. And there we identify that how we can take care of this problem of IDBI Bank. So one issue was with regard to the asset quality. So we fixed that asset quality should have to be focused with regard to the flow of the asset quality as well as the stock of the asset quality. Another issue was related to the capital. So in relation to the capital, we aggressively worked on optimizing our RWA risk-weighted assets, as well as we are improving the internal accruals and selling the non-core assets. Third was the cost optimization. So cost optimization, we identified various areas where we can work on a thin and lean operating structure and reduce our cost. And fourth was improving our non-interest income. by cross-selling the products and by targeting our HNI clients. If you know that IDBI Bank is well known, it's having a brand and it's having a huge customer base and very good customer base.
Mr. Jain, sorry, I'm just going to interrupt you there. Mr. Jain, I'm just going to interrupt you there because we're familiar with the May plan. We've covered it extensively. So I guess, what I want to know is what the progress is. For instance, like you said, the first problem is to deal with the stock and the flow of NPAs, but the problem is the stock. You've got 50,000 crore in NPAs on your books, sir. Can you tell me what you're doing there? Are you selling down aggressively to ARCs? Are you being able to? Are those deals getting closed, sir?
No, as far as dealing of the stock of asset quality is concerned, we have worked out the organizational restructuring. We have created the dedicated team. We are engaged with the corporate clients as well as the small ticket clients. If you see, around 300 of employees we have put on recovery of the retail assets only, retail NPA book. And for dealing with the corporate book, wherever we are the leader, we are constantly engaged. Now, as far as selling of the assets are concerned, you understand the constraint in the market. There are various constraints in the market with regard to the pricing, with regard to the availability of the people to invest in these assets and to sell to the ARCs and other companies. So that's what the constraint is.
Sell anything at all, sir? Have you been able to sell anything at all this fiscal year, sir? Have you been able to sell anything?
From non-core assets, yes. Non-core assets, we have already identified.
Have you been able to sell down any of the bad loans, sir?
No. Bad loan we are not able to sell down because it's a pricing issue. It's a various market depth issue also, because when the pricing is not appropriate, there is no point to sell those assets at throwaway prices. So now your point is how we have engaged the BCG and what BCG will do it. As I told that with regard to the turnaround strategy, we thought that we have to engage an international consulting firm to bring the international best practices and augment the efforts of the bank to work around the turnaround strategy. So our mandate to them is revenue enhancement, cost optimization, manpower productivity, and asset utilization.
Mr. Jain, is there a time boundness to this? Have you put in a deadline as to when you hope to be able to achieve all of these things that you've listed out? And really, how do you manage or how do you expect to deal with the core issue that Ira has been talking about, which is that the asset quality at the end of all of this may not improve, though some of your cost parameters, etc., might look better?
That's what exactly we have put the timeline. This assignment to BCG is for 9 months, which can be extended further to the 9 months. Now our strategy is that we have to improve our core strength of the bank from the banking operation. And last year, whatever our operating cost was there, despite of having the lesser income because of the high NPL book, we are trying to maintain our income from operations by improving our efficiency, reducing the cost and all other things.
You've explained that actually in great detail, but I suppose the question we're asking is how will you deal with the core issue of the bad loans that are sitting on your books right now? That core issue, are you going to wait it out till you hope asset prices recover to the extent that you can sell them at a price that you like? How long will that take? Because in many of the accounts that you've loaned to, even if those accounts are going through a resolution process, it could be a year or two. So are you saying we will see no improvement in those numbers in the next 12 to 18 months?
That is what exactly we told, that this year we have to live with it and we have started working on it, and next year we are expecting that there will be an improvement. Few cases in the NCLT probably may get resolved in the Q4 itself. So when those are getting resolved, then there may be some upside available to the bank, but with regard to the provision requirement for this NPL book, that will remain. And we have to live with that provision requirement for this financial year. But next financial year, we are hopeful, very much hopeful, that there will be a good improvement as far as resolution of these NPL book is concerned.
Mr. Jain, what are you doing on the lending side? You are under prompt corrective action, if I'm not wrong. If so, are you doing any lending at all, sir, or you're sort of just maintaining the book at the levels it is, perhaps even reducing the book over this fiscal year?
No, it's not that way. Basically, we are working on a capital light business model. And in the capital light business model, we are lending to the retail as well as MSME and the priority sector lending. We are taking very cautious exposure in the corporate clients, and rather we are trying to shed our corporate clients wherever the RWA is high. the risk weight is high. So net to net, probably there may be a negative growth on the book of the credit, but there will be a change in the mix of the credit. So the portfolio we will tweak to more to the retail side and less to the corporate side.
Sir, on capital, sir, I know you've sold your stake in SIDBI. Firstly, can you tell me who to and how much you raised there, and how much have you been able to meet from that? I think you put a target of about 5,000 crore from non-core asset sales. Where are you on that target, sir?
That's right. We are on the track with regard to those 5,000 crore of non-core assets, and we have already done CCIL 5% and SIDBI 10%. The other process also, wherever there are non-core assets identified by the bank to come out, we are on track.
How much have you raised through those 2 sales, and can you tell me who you sold the SIDBI stake to, sir? I don't know why you didn't disclose it.
No, we have sold it to various, obviously, because the SIDBI has been purchased by various banks and financial institutions, and they are seeing the upside in the SIDBI, and wherever they are feeling the synergies, those financial institutions and banks have picked up this 10% stake, and we did through the bidding process, open bidding process.
Okay, last question from me, sir, and this is with regards to any potential capital raising. I think the RBI Deputy Governor Viral Acharya in a recent speech said, why are public sector banks not going in, tapping the markets? Is it your impression that the market is not open to banks like you, whether through equity fundraising or even AT1s, which have not done very well? Some of the PSU banks have tried to tap the AT1 market. They've had to price their issues prohibitively high.
As far as our strategy and the position is concerned, our strategy is that first we have to improve the strength, the core strength of the bank, and try to bring the improvement in the internal accruals. Second is we are regularly engaged with our promoter. That third, capital, we are selling the non-core assets to meet our requirement. And fourth, as I told, that RWA risk-weighted assets we are reducing. When there will be a strength in our balance sheet and there will be an appropriate time with an appropriate pricing in the market, definitely we are not averse to chase the market.
Mr. Jain, we understand that you set up a special department in the month of June to deal with the bad loans sitting on your books. It's been 4 months since then. I know that may not be an adequate period of time, but could you explain to us if that department's had any success in resolution? What exactly is it going to set out to do? Is it just procedural, or is there going to be some strategic effort by that department?
No, that department is working strategically. That department is basically bringing a lot of traction at the ground level. Earlier, we have given that each and every NPA borrower has to be met by the employees of the bank, which was not the case in the last time. And we have to meet every borrower irrespective of the loan amount. We are seeing a lot of improvement, and probably it is too early to see the substantial improvement in 1 quarter. In next 2 quarters, there will be improvement, and next year onwards, definitely there will be a substantial improvement with regard to resolution and recovery and upgradation.
Mr. Jain, could you explain improvement? Are you just hoping to be able to collect on some of these debts, or and when you say the bank hasn't met many of the borrowers, are you talking about really small borrowers? Are you talking about mid-sized borrowers? Because I thought that this department was mostly to deal with the large-sized bad loans that you had on your books.
No, it's basically all borrowers. We have created 3 verticals within that department. One vertical is dealing with all the corporate clients. Second vertical is dealing with only mid-size corporate clients, and third is dealing with the retail clients. So it's on all the front. Retail clients have to be dealt with by the branches in the field, whereas the mid-corporate has to be dealt with by the regional offices and zonal offices with the support of the corporate office. And the large ticket corporate clients are being dealt with by the department directly at the level of executive director. So we are in constant engagement with all those clients, and I am also meeting frequently. Up till now, I have met at least not less than 50 corporate NPA clients, to whom we are engaged to find out a solution and the resolution, keeping in view the constraints with their balance sheet as well as the constraint of the bank's balance sheet.
Okay, I just have a short final question, sir. Next week, when we come back from the long weekend, on October 3rd, will be the day that, in fact, we will see a new disclosure regime for borrowers, whereby even if they're defaulting by a day, they will have to disclose that to all stakeholders, and it will become public information. Have you all figured out how this process will work, what it will mean for banks and lenders like you? And do you believe that you might build in some degree of flexibility or generosity, saying if there is a day's delay, it might not, you might not react in any particular way, though rating agencies might have a different view of this?
I feel this was a long-awaited reform which was needed, and it will fade away the asymmetry of the information. Because when there is a public domain information available, it will bring the credit discipline among various corporate clients, and it will bring credit discipline among the lenders as well. So I think it's a good move, and it will help the banking sector to bring the financial discipline.
Mr. Jain, appreciate you speaking with us this morning. Thank you very much. That was M.K. Jain of IDBI Bank. And I think with that, we're almost at the end of the show, but we've got one more big personality to bring to you, and that is Satya Nadella. He has always been upfront in opposing Donald Trump's immigration policies. Most recently, he criticized the U.S. administration's plan of scrapping the Dreamers policy. This is to do with immigration, of course. Speaking to Bloomberg's Emily Chang, he says it's only fair that people who have been contributing to America's development get their due.
For us, it comes down to what are the timeless values that then have to translate into these principled stands that we take. Whether it comes to immigration, making sure that we do everything to protect our employees who are contributing not only to Microsoft but to the American society, in the case of Dreamers, taking a principled stance. So that's how we pick these issues. But at the same time, we're not elected officials. I don't have a mandate. So we're clear that ultimately we are subject to laws, but we will fight for what we believe is the rights of our people.
We've seen the NFL getting pushback for pushing back against President Trump. Starbucks has gotten pushback from shareholders. I'm curious, have you gotten any of that pushback from customers or the board?
One of the things, whether it's at the board or even at our management level, perhaps the biggest recognition, if I've learned one thing in my, 3.5 years as a CEO, is the true multi-constituent nature of the job, right? It's not as simple as thinking of it as just the shareholders, just the customers, just the employees, just the government. It's all of these forces simultaneously all the time. For a large company like ours, a large multinational company like ours, really balancing all of this is what is required.
You've met President Trump twice now. What's your impression?
Both the times the conversations were all centered around, in fact, my conversations were around immigration and why I think immigration and immigration reform can drive American competitiveness, making the case for it, as well as the need for American infrastructure, in particular digital infrastructure. And those conversations were good, and he was receptive to those ideas, and now we need to sort of keep working and making sure that there's action on it.
We're seeing drive to further regulate the tech industry from Google to Facebook, from the US to Europe. Are you concerned about the threat of increased regulation?
I think the most important thing for tech companies is not to worry about any impending regulation. You have to be able to look and say, like in our case, in any country, whether it's in the UK, in Germany, in China, or in the United States, how have small businesses become more productive? How have large businesses in those countries become more competitive? How has public sector become more efficient? That, to me, is ultimately how I think we have to measure our success. And that's what's going to cause governments to say, are these companies contributing or not?
Okay. And a lot more from Satya Nadella's interview lined up through the day only on BloombergQuint.com. Just a quick wrap a quick check on what's happening in the markets currently. We're up about 0.5% for the index, yes, but look at the retail space and the consumer space, so to say. So Rupa and Company is up about 13.5. That's the top gainer on the Nifty 500. Shoppers Stop follows suit with 11% gain. And if we just float down a bit lower, Future Consumer is up about 4.5. Future Retail is up about 4.5. And Avenue Supermarts is up there too, about 4.5% at 1,088. So a bunch of these retail and retail-related companies are doing very, very well. In addition to the oil and gas space, GAIL, Petronet LNG, and I think GSPL. All of these three are also having a field day in trade. With that,
We're wrapping up today's Indian Open.
Yes, indeed. So from Menaka, Ira and me, thanks so much for watching. But up next, after this very short break, the FNO Show.